So this is our market alert video for today, and I am a little unsteady here. I'm the CEO of Retirement Planners of America. I'm here in Bordeaux, as you can see, on the countryside, out in the French countryside. Beautiful. And it's been raining a lot, but it's cleared up. And so I think maybe that's an allegory for what the market is going to do. So we're going to get into that here in just a moment, but I thought I'd share with you a little bit of this wonderful scenery here in France. Okay, so it started to rain. So maybe the market's not going to be that great after all. It's like pouring. I'm soaked. Man. But I think there's sunshine up ahead. So we're going to keep plowing through till we get to the sunshine. Play through the bad markets to get to the good ones. That's what we do, don't we? Well, as promised, looks like the sun has come out. And some little friends over here. So you just wait for the sunshine, eventually it'll get here. But as you'll notice, I'm wearing a helmet and I'm also wearing a jacket, because you always have to be prepared for when it rains. Never miss an opportunity to match up our strategy to what my trip is. Okay, so we're back in the hotel room now. This has been a very active week for us. Put in 190 miles on the bicycles. And as you saw, we had rain and we had sunshine, which is basically what happened this week with the market. We had new all-time highs set earlier, and then, of course, the drop at the late part of the week. So we had sunshine and rain in the markets as well. Good thing we have our helmet and we had our rain jacket on, because otherwise you never know what could happen. Certainly you'd be soaked. And so basically our forecast for the rest of this year remains unchanged. The Federal Reserve is, in our view, not always going to be very important, but so far it appears that they're not going to raise interest rates at all. They've said so. And then the likelihood of them lowering interest rates is becoming more and more remote. And so because of that, it appears that we're going to have basically the Fed do nothing. That being the case, the focus becomes profits. How are companies doing? And as you know, we believe that profits drive stock prices. And so if profits continue to hold, which they've done well, then we should see the stock market do well also. Now, on the bond side, if the Fed does nothing, then bonds hold. They're paying a nice dividend. The prices shouldn't change much, so bonds continue to be a good investment. So the likelihood of the Fed raising interest rates at this point is very small, but the bias is towards them lowering interest rates. So what would happen in that scenario? Well, certainly the stock market would take that very, very well. We could see new all-time highs dramatically set, but also the bond market could experience a significant rally, which is what we're looking for. May not happen this year. Now, there's a lot of talk about the Fed not doing anything with the interest rates this year. Certainly appears to become more and more of a reality. Our view was that in the second half of this year, there would be an interest rate lowering. We'll have to wait and see what happens. But the key thing to remember is that if the Fed doesn't raise rates, then we could expect the market to be higher at the end of this year than it is today, because profits would drive that and they look to be good. If they lower interest rates, Katie, bar the door. We think we could see a massive rally both in stocks and bonds. So overall, it looks good. But as I showed you in the video, you must always have a rain jacket and you must always have a helmet when you're riding your bike out in the countryside, right? And so what we want to make sure is that with your investments, it's the same thing. And we have our invest and protect strategy, which is designed to protect against the downside. Since we work with people who are retired or retiring soon, one of the biggest risks we think is that a big bad bear happens and suddenly you lose 30, 40, 50% of your money, as a lot of people did back in Y2K and in 2008. and then that just unravels your retirement plans, and we don't want that. We want your money to last as long as you do, and we want you to have financial peace of mind. But most importantly, we want you to become a SCWPR. And if you don't know what that is, a SCWPR is the acronym for Second Childhood Without Parental Supervision. We want you to go play, have fun, enjoy. That's what we're about. So overall, things look good. We'll see where it goes, but we have a positive outlook for now. Thanks for watching this video. Please share it with all your friends and family, as many people as you possibly want. Okay, so thanks for watching. Oh, and next week I have a special surprise for you. We were in Saint-Emilion, which is a nice little town that has wonderful wine. And something happened that was very unexpected. And so I want to share that with you. So make sure you tune in next week.